What is going on, everybody? Welcome to the Friday market wrap. It has been a little bit of a crazy week in the markets. And so go ahead. Where'd that go? Q&A. Ask me anything. Let's pin that. Go ahead and throw your questions in the chat. Make sure you tell me if you cannot hear me or cannot see me. I want to make sure my tech is working for you. One thing right off the bat that I just noticed, Bitcoin is forming a bit of a bear flag. So at least for the short term, not a terribly bullish setup we have going on with Bitcoin right now. Let me try and pull that chart up for you. Hopefully it doesn't glitch out. If it starts glitching out, let me know which side of a parallel channel with as few false breakthroughs as possible. That is a correction from the prior move. And so they are continuation patterns. So a bear flag is a bearish pattern. If this was upside down, it'd be a bull flag, it'd be a bullish pattern. So if this does confirm and it breaks down below, then you'd expect another big flush out from there. So unfortunately, anybody who is hoping that the bottom is in Bitcoin, which I did think so based on a couple of things. If you go back and watch my recent video on Bitcoin, I thought that the bottom may have been in, but this technical setup means it looks like we could have one more big leg down. All right, let's check out the chat. Thoughts on energy stocks? Do you think it's related to Venezuela? I need to do a little bit more digging into what's going on in Venezuela. I mean, it's odd. I'll just say for now, I'll say I'm bullish energy. I love the energy setup pretty much no matter where you look, whether you're looking at oil, whether you're looking at natural gas, whether you're looking at nuclear. I am long quite a few positions across energy. Still sticking with yields heading higher. That's what it looks like. And again, this is that when I say that, that's a long-term projection. I'm not talking about the next couple of weeks or even couple of months. I'm talking the next couple of years to couple of decades. Like when I say long-term yields are headed higher, it's because of the long-term debt cycle. And from 1940 through 1980, you saw yields going up, inflation going up as the government outsourced or offloaded its debt onto the economy. They did that through inflation, through printing, through yield curve control, all the above. So and then once we hit 1980, it was like the government's debt to GDP ratio was all the way down at like 30%. Inflation had peaked, interest rates had peaked, and the whole cycle kind of reversed. And so from 1980 through 2020, we had falling interest rates. So it was a bond bull market for those entire 40 years. And remember, every financial advisor, every economist, everybody who has been in this field has been in this field during that phase of the long-term debt cycle. So nobody alive today who's actively investing and working and talking lived through the 40s through the 80s, or at least was investing through that. It's a different environment when you have constant, for decades, you have disinflation, which means the rate of inflation is moving lower. Prices are still going up, but the rate of inflation is moving lower. And then you have yields going down, so you've got a bond bull market. So it's just a different environment, and you can't, with the global reserve currency, you can't have yields go below zero at the short end. And so when we hit 2020 with ZERP, all the money printing, inflation popped and came out of the bag. Government debt to GDP ratio peaked above 120. Really, the only option is for the government to play the same playbook that they did from the 40s to the 80s, which is going to be more yield curve control. So government gets interest rates that are lower than the rate of inflation, but because of those higher rising prices, that means everybody else's debt is going to be more expensive. So this is a years to decades long projection that I'm looking at, not weeks to months. Love the wall art behind you. Thank you. This is a custom piece. It's painted on like copper, so it looks even more vibrant in person. It's very cool looking. But it's called, I call it Capitalism. It's monopoly represents obviously accumulating assets, using debt judiciously. Um, we represent some things like the bank never goes bust. They can just print new money. Scrooge represents what I think that Scrooge is the most misunderstood and underrated character in financial fiction. The miser plays a very important role in economies because they produce without consumption, which means they are forcing prices to be lower than they would be otherwise, providing services and products for an economy without turning their money in for real wealth. And so the miser represented by Scrooge is I think it's a kind of like a Dark Knight. Like people think he's a villain, but he's a hero. Bitcoin is a pin lapel on his jacket there. They're playing with gold. They're playing poker, which represents risk. If you want to make money investing in a business, you got to take risk. They have all sorts of different kinds of money there. They've got US dollars, they've got gold, they've got Bitcoin. So I call it capitalism. I like it. Glad you like it too. All right. Is it worth valuing the S&P in gold to decide whether or not it's overvalued? Does the average PE take for future inflation into account? Yes, pricing and valuation takes every piece of information about the future into account. That's what markets are. They are future discounting machines. And so when you think about like how certain something is to happen in the future, imagine like everybody said, okay, well, we all got a vision from God, and so we know that it's true, and everybody's 100% convinced that the S&P 500 tomorrow will be worth, or let's say in 3 days or in a week, it'll be worth 10,000, and today it's 6,800. Well, then I know that I'm willing to buy it at 7,000. I'm willing to buy it at 8,000. I'm willing to buy it at 9,000. I'm willing to buy it at 9,900 because I know that it's going to be worth 10,000 a week from now, which means instantly nobody is willing to sell it for anything less than 10,000, which means the price immediately instantly becomes 9,999.99. And so anything that is certain to happen in the future gets priced into the present. The less certainty you have, but higher probability, it'll be priced in, but not completely. So when you talk about the future expectations of what inflation will be being priced into valuations, like absolutely. Now there are disagreements about that, and that's because of the uncertainty, and that's why the real inflation rate is probably not perfectly priced into the present because nobody knows what the real inflation rate will actually be. But as far as the information is available to the people who are participating in the markets, it's going to be the probabilities of those things are going to be priced into the present. And so that's why I do like valuing things, or at least checking and looking. What does this thing look like when I price it in gold? Because for 5,000 years, gold has done a very good job of maintaining purchasing power and showing slight deflation over time in terms of its purchasing power goes up over time. And so when you price things in gold, you get a clearer picture of, hey, is this one asset, really expensive, or is it maybe just the dollar that we're using as the denominator to price it is maybe getting less valuable? Joseph, hello from Florida. Been watching you since 2021. You're very informative. Well, thank you. 2021. That was about 2 years after I started. So I'm glad you stuck around, stuck around this long. I appreciate it. How much could Bitcoin drop? I mean, Bitcoin could drop 100%. Anything can always go down 100%. Whenever somebody says, okay, something's gone down 50% from here, so far, what's the most it could go down from here? It's like, well, it could go down another 100%. That's how percentages work. So the fact that something has fallen does not mean anything about how much it could fall in the future. Now that would be very difficult because there are some very, very, very large orders waiting to be worked at low prices. Like there's an order right now to buy 21 million Bitcoin at $1 per Bitcoin, which means it'd be, pretty difficult for it to fall that far because there would be a lot of buying at that point. Unless something happens that makes those people pull those orders. So Bitcoin, but if you're asking specifically regarding the bear flag, I don't know. It's just a bearish setup, and it depends on a number of things like how many stops and how much leverage gets flushed out. I think the next point where I would be like, surprised if it didn't hold there, would be above like 68,000. There's some really strong support in between like 68 to 74,000 on Bitcoin. And right now the electricity cost of I believe of mining Bitcoin is like 71,000. I could have that explain. I just saw somebody post the electricity cost of Bitcoin, so I don't know if that refers to to mining or to what, but that metric right now is at 71,000, and the price of Bitcoin has never fallen below that so far. It doesn't mean it can't, but it hasn't so far. If you trust that Bitcoin in the long run is going to go up, what do you think of instead holding Bitcoin, put half your money into Bitcoin, half into short-term bonds, and if MicroStrategy fails, you buy Bitcoin? Um, I don't know why. I mean, I wouldn't. The only time that I think short-term bonds are appropriate for a portfolio is for cash needs. So, like using T-bills instead of like money market funds or high-yield savings accounts, because depending on the size of your portfolio, if you have 5% of your money in cash, um, you're depending on the size of your portfolio, you could very easily get over the FDIC limits, and then instead of spreading your cash out between 5, 6, 7, 8 different banks, you're going to be like, okay, well, I'm just going to put it in, most of it in like a T-bill ladder. And so I think that situations like that make short-term bonds appropriate, but other than that, in terms of investing, that like they're not. I view them as reserves, like cash and cash equivalents, and so I'm going to treat them as such and choose the right ones for that purpose. And so anything like in my investing portfolio, that's just going to be a way for me to lose money to inflation. So I'd rather invest it in a different way if I want to take that strategy. The risk on that, though, on the other side of the comment, for instead of holding Bitcoin, is that like this could be the bottom, and so you have the higher reward of if it goes lower, you can buy in lower, but you have the higher risk if it doesn't go lower, then you're at risk of buying higher if you're going to get back in. Where do you think Bitcoin is headed? Seems like it's in a channel. I maybe you skipped ahead when you joined, but I just showed it's got a big bear flag set up right now. So the technical setup for the short term next couple of weeks doesn't look pretty. But we'll have to see and wait if that confirms, if we get a breakout to the downside. Okay, thoughts on Tesla stock long term? I'm long Tesla. I'm very bullish on Tesla. It's one of the most extremely overvalued companies there is, but the reason for that is because people are pricing in it being like insanely, profitable and valuable in the future. Basically, it's a very expensive bet on the future being robots doing a lot of labor around the world. Robo taxis being, the one of the main forms of transportation around the world. I think that's very possible, and so that's why I'm long. But it is unlikely, at least to the extreme price in terms of how it's valued right now. And basically, it's an asymmetric bet. It's unlikely, but if it works out, it'll be very profitable. What kind of stop loss for options contracts is best generally? The best kind of stop losses to use for options is not using stop losses. Never, ever. I mean, you do what you want. I never, ever, ever will ever, no matter what, touch any sort of a stop order for options. And here's the reason why. There are two types of stop orders. A stop order, just so you know, is an order that will fire off at a specific price. So if the stock hits a specific price, an order will get fired off. So you don't yet have a live order waiting to buy or sell. That live order is waiting. And once a price limit gets hit, then boom, that order goes live. There's two types of orders. There's a market order, there's a limit order. Market order says, I want a guaranteed fill at the next available price, not best price, the next available price. That's a market order. For stocks, that's totally fine because the spread between the bid and the ask is usually a penny and there's a ton of volume. So market orders on basically every exchange listed stock are basically always okay. You're going to get a great price and you're going to get executed right away. A limit order is you saying, well, I don't want to sell unless I can get a specific price for it that I actually want. And limit orders are fine for like if you're wanting to get out of a position at a specific profit because you're saying this is the price I want, and if at any time in the future somebody's willing to buy it from me at that price, then let's go. Let's get rid of it. So limit orders are fine. Stop orders, you cannot execute effectively on options because a stop order by itself will fire off a market order. The options have a bit really wide spread between the bid and the ask, unless you're trading like the close weeklies or monthlies on SPY. The spread is going to be really wide, which means when your market order fires off, you're going to get filled at the worst price. You're going to fill it at the next available price because if it fires off an order for you at the ask, there's no guarantee that you'll get filled there. But the only way to guarantee you get a fill is by selling it at the bid, which is going to be the worst price. And most of the time you can get filled near the midpoint, not the bid. But you fired off a market order with that stop, which means you're going to the next available. Because you wanted to guarantee execution, not try and get a specific price. So you're always going to get a terrible fill if you use stop orders on options. Now in your mind, you're thinking, okay, well, I'll do a stop limit order then because that solves that problem. And no, it doesn't, because you don't know where the price will be once your stop gets triggered. So when your stop gets triggered, let's say it drops down to $100 per share, your stop gets triggered. You don't know where the bid and ask spread will be on your specific option contract. And so if you place your limit too high, you may just not get a fill. So your stop was worthless. If you place it too low, you're still going to get filled at the bid. So your stop was worthless. The only way to know that you're going to get execution and get a decent fill is to do the order manually when it hits. And so what I like to do is set stop alerts so that if a stock hits a specific price, I get a notification, whether it's through a trading app like TradingView or through my broker. I get a notification that the price has hit a certain price. Then I go in and I see where the option is trading, where the bid and the ask is, and then I place my order manually. That's the way that you're going to get a good fill. So that's why I always say that it's kind of dumb to ever try and use any sort of a stop order on options, because you'll either won't get a fill or you get the worst fill. All right. You should do a video on the housing market. It's ice cold. I recently did a video on housing. I don't do it that much just because I invest in real estate. I'm currently closing on a house right now. And basically my opinion hasn't changed, and I am not like a full-time professional real estate investor. I accumulate properties for my portfolio, but I'm definitely not like deep enough inside that industry to be constantly making videos about the different ways the wind is blowing in real estate. So overall, the mid to long term, my opinion has not changed at all, and so there's no reason for me to make another video on it. But I did make a video probably a month, maybe 2 months ago on real estate, and nothing has changed in my opinion since then. All right, let's see. Thoughts on OpenAI $1.8 trillion of commitments over the next 8 years, with only $20 billion of revenue expected this year. Yeah, we'll see how it goes. This is one of the reasons, like this, it's very difficult to have a moat in this space. Just think about your own habits with using AI tools. There's no like very little brand loyalty. There's very little differentiation. It's like you're going to use the one that's the cheapest or the one that works the best, or a combination of both for your specific tools or needs. Personally, like I'll always be rotating through a couple, and I will find myself going back to the one that currently is working the best in terms of its outputs. And so yeah, it's a very much like a commodity, like a commoditized product that I don't know how it's going to turn out. I don't know how companies are going to kind of solidify. My expectation will be it'll be just have to be more built into the things that people already use rather than trying to build an entire profitable business model just around using one specific AI interface. But I don't know. I could be wrong. Money is actually what society owes to you. Kind of, but uh that's partly true. Money is the most saleable good, and that emerges organically. I mean, sometimes by force, like in the case of the dollar, but over the long term, the thing that is used as money is a product of like organic evolution. It's what made gold arise to be used as money. Because if you like using rice as money works because people will always accept the rice as payment for something because they know somebody else will, but it doesn't work that well because if you wait too long, it might mold. The mice might eat it. It might get wet and get ruined. And so then just over time, it evolves into, okay, well, what is the thing that, you know, people always accept as payment? And it comes down to, okay, well, I'll accept it as payment because other people will. But the reason we all will is because we don't have to get rid of it that soon. It won't rust. It won't decay. It won't get destroyed. It's indestructible. It's very easy to verify whether it's real. It's identifiable. It's hard to fake. And so because of those characteristics, it ends up being the most saleable good or the most marketable commodity, if you want to use those words. And so when you then boil it down to, okay, well, it's this thing is really only valuable because it's used as money. That's its main use is as money. And it doesn't have other value ascribed to it. Like rice, you can eat it or you can use it for money. Um, when the thing has most or all of its value from its monetary usefulness, then as it is stored, it does operate kind of like an IOU because you've provided labor to somebody in exchange for that. And that's where you're just holding your value until you decide to exchange it for real wealth, for a good or a service. Um, and so in that way, money does kind of operate like a debt society owes to you, but it's a little bit different in the sense that it's active on the part of the money holder only. It's not active on the part of like society. Um, and it's also not debt in the sense that the value that it carries is constantly being negotiated by the free market. So real debt, like a structured contract, is like we have an agreement that at some point in the future you will give me a specific number of something. And money is different because it's just the other side of all transactions. And so over time, the goods that I want to exchange it for might become more or less valuable. And it's a freely moving um, debt, if you will. So there are similarities to it. That is partly true. All right, let's see here. You often advocate for as little government overreach as possible. Where do you draw the line as to what is reasonable and what laws are just? The violation of rights. Um, and it's funny because if the law could not be used to violate rights, then nobody would care about voting. Nobody would care about who's in power. Nobody would care about which party controls the government. The only reason anybody cares about who's in power and what laws are made is because the law is used to violate rights. So we have an incentive to make sure somebody is in power who is on our side, not violating our rights, but violating somebody else's instead. And sometimes the goal is even to violate somebody's rights. I mean, when you look at something like taxes, involuntary taxes, wealth taxes, um, you are taking somebody's property from them without their consent. So the law, the what counts as a fair or just law and government in terms of overreach or not, the line in the sand is very clear. It is, are you violating rights? Or at the very least, are you initiating the violation of rights? Because obviously when you look at like, okay, let's say we have a little town where, there's no government. We're just a little town just off in the, off in the boondocks by ourselves. There, we're self-regulating, whatever. And somebody decides to go around, trying to murder everybody. Everybody in the community would be well within their rights to violate that person's rights and restrain him, potentially even put him to death in order to prevent themselves from having their own property rights violated, and also as retribution and compensation for the violations that person has already committed. And so this is where this is called, it's the non-aggression principle. It's like, it's not a pacifist stance. It's just a non-initiation of violence stance. And laws and the government, insofar as what they are doing is communally defending individual rights, they're perfectly just and perfectly moral, and people are free to opt in and opt out and stay and join and leave and participate. But once you cross that line into initiation of the violation of rights, that is the overreach. And that is like today, I don't know, 90% of what our US government does. So any step in the other direction is usually what I'm advocating for, because we have a very, 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 very long way to go before we get there. All right. Does 75% physical precious metals already there, so I can't change easily, hedge my one stock Tesla portfolio that I do BBD strategy with adequately, or do I need to raise cash equivalents? Well, I can't tell you what I think you should do, because I don't know you and I don't know your personal financial situation beyond the details that you just provided there. But if I were in your position, here's what I would do, because this is how I do my own portfolio. I have about 30% in real estate, and that is cash flowing single family homes. If you're already in the business and you know different ways to make money in real estate, you're concentrated or experienced in other places, whether it's multifamily or fix and flips or whatever it is, that's fine. But I like 30% in real estate, about 30% in stocks, and that can be private stocks as well. That doesn't have to be publicly traded. About 30% in reserves, which is made up of gold and Bitcoin and cash equivalents. The breakdown there is I have about 20% of my portfolio in gold, about 5% in Bitcoin, and about 5% in cash and cash equivalents. And then the extra 10% is for speculation, asymmetric trading, hedging, that sort of thing. And so that is the portfolio that I stick to and usually recommend. It's very similar. It's just a slight variation on the definitions of what reserves are. Very similar to like a 60-40 portfolio, because the bonds in a 60-40 portfolio are supposed to be there for reserves. They just don't do a good job of that today. And so, and then the real estate, if you can access the U.S. real estate markets, is because it gives you access to cash that is cheaper than the rate of inflation over the long term, with 30-year fixed rate mortgages. It gives you all the tax benefits. And then as long as you pick real estate that cash flows, then you're having somebody else build your equity for you in that position, and you get leverage that you can't get in other asset classes. So that tends to be the portfolio breakdown that I like the best. Within stocks, I would say less than 8 positions is probably too concentrated, because if you have one, I mean, a 30% drawdown of your overall portfolio, if you have 30% of your overall portfolio in stocks, but it's only in one stock, something goes wrong, you could lose 30% of your entire portfolio. And you don't need 30% profits to get back to break even. If you have a 30% loss, that means you're now at 70% of your initial portfolio, which means you need I'm doing the calculation right now. It's a 42.8% gain just to get back up to break even. So losses are always more powerful than gains. And so that's one of the reasons why you want to have your positions, managing your risk through position sizing. Because if something happens to one of your positions that you didn't anticipate, like for instance, Tesla becoming valued at a normal valuation, given what it's currently doing, the price would go way, way, way lower. And you don't want that to become something that is going to take you years or maybe even decades to bounce back from. Okay. USD stronger or weaker over the next couple of years? I think stronger. What are your thoughts on EFFR rate cycle preceding every market downturn, including crashes, and the fact that we're currently in the middle of the market downturn crash portion of the cycle? EFFR rate cycle. EFFR rate cycle is just when the federal funds rate. I'm curious what you mean by that, because I haven't heard somebody talk about the EFFR rate cycle preceding every market downturn. Are you saying that when they start cutting rates, that precedes recessions? Because that's different than preceding market downturns. And when the Fed starts cutting when the market is at all-time highs, the next 1 to 2 years, the market is up 100% of the time, every time. So I'm not really sure exactly what you're referring to there. Let's see. I know you like Bitcoin, but what about the utility of something like Solana? I struggle with Bitcoin not having the utility to it. Blockchain is a monetary technology. It is designed and innovated and through a bunch of people trying to do the same thing, and Bitcoin came out on top again organically, as money. And so when you try and take that technology and change it and shoehorn it into other applications, it just does those other things poorly. And so you don't need utility beyond it being money. And so if something's going to be used as money, you want the characteristics of it to fit perfect monetary usefulness. Yeah. So anytime you then try and take that, tweak that, and shoehorn it into other applications, that's why nothing of the sort has, after like over a decade now, nothing else has taken off at all. Everything is kind of like popped and fizzled because it's like, okay, well, that adds complexity, it adds cost, it adds inefficiency, and it just doesn't work as well as just a different solution that we can already do. There's no reason to try and shoehorn blockchain technology into that. Um, How about two forms of money? One fiat for circulation, assets for store value. I mean, that's globally, that's the way that it works right now. Central banks and sovereign wealth funds store their wealth in gold. And then they have fiat sovereign debt in order to use as, like for payments. Um, so that's really and you can live like that too. You can store your wealth in assets, have your savings in hard money, and use currency for your bills. Have you looked at David Webb's The Great Taking and Tokenization of Everything? I've looked at it. I haven't read it. It's without going too far into it, it's not worth I wouldn't go so far as to say it's not worth taking seriously. It's not worth taking action on, especially when you get to the action steps being proposed, which are almost nothing. um, Anytime you see or hear somebody saying something that sounds extremely terrifying and scary, and there's a big plan that everything is going to be taken away from you. And so, but there's really nothing you can do about it, or the things you can do about it are basically like not really meaningfully different than the regular everyday actions that most people take. It's like, okay, well, maybe there's not much to this. So that's kind of like a flag, if like a little signal, like little red flag in the back of your head when you're looking at things like this. But bottom line is, I don't think it's worth taking action on. All right. Currently a 25-year-old. I'm working 50 hours a week, working on Hondas. Nice. Looking to get out of the working my life away thing in the next 5 years. I have some investments. Any advice for me? Yes. Here's what I would do if I were in your position. So, okay, so you're 25. Working on Honda 50. Okay. Number one, change your mental frame of reference about jobs. Jobs are not for earning. Jobs are for learning. The nice thing about a job is that you get paid to learn a skill. So the goal and the purpose of having a job, especially when you're young, is to learn a skill. And the perk is that they pay your bills for you while you learn that skill. Many people pay in order to learn skills. But the nice thing about a job is that they pay you to learn that skill. Once you have sufficiently, mastered, I don't know, 75% of that skill. Like you're not as good as somebody who's been doing it for 40 years, but you could teach, somebody coming in for the first time how to do it. Then it's time to work on stacking your next skill. And in your position, what I'm not talking about is, okay, now I'm going to go learn how to work on Toyotas. Okay, now I'm going to go learn how to work on Fords. And I'm not even talking about like, okay, right now you know how to do, um, you know, you're going to see. I don't know much about cars here, about from the mechanic side, but let's say like what you can do right now is you can take an engine apart and replace um the cylinders or the pistons if they're cracked or whatever. I'm not even saying go from that to learning transmissions. I'm saying, okay, you've got a specific skill set that you know how to do something with Hondas. You've got a little bit of a niche, but I'm willing to bet there is a lot of generalized knowledge and skill that has to be built around that in order for you to be able to do your job well. The next skill that I would, if I were in your position, try and stack would be something that you're thinking in the back of your mind. You're trying to like build a business. So it would be, I'm going to get into a position, even if I have to take a big pay cut, where I'm learning something like sales. So it may not be even in your current like company or industry. You might have to get into like maybe even like a car salesman, but that might be too specific and too far away. Maybe marketing for your type of business. I'm sure that in your business, I'm sure there's probably not a lot of cold outreach that happens. It's probably mostly warm leads. Somebody's car breaks and they come to you and say, how much will it cost to fix it? And then they go somewhere else. So if there's inbound sales or if there's marketing, then that would probably be my next place that I would try and go to. If not, trying to get into management, because learning how to lead and manage people, it's a difficult skill. From there, maybe getting into hiring, because learning how to recruit and headhunt and pick and filter and find people who are good people, it's a very difficult skill to learn. And once you've stacked, I would say 3 or 4 of these related skills that you can it's called a skill stack for a reason, stack them on top of each other, you can go do your own thing. And at the beginning, it's going to be you doing the same job you're doing right now, just for yourself. And so you've learned how to get clients, whether it's door knocking or sending out flyers or online marketing, whether you're running ads or whatever it is. And then you know how to go and actually do the work that you're trying to get them to do. At that point, it's going to be very, very difficult for you to do both. It's just going to be hard. It's going to be grunt work. It's going to be very difficult. But if you know how to get a client and you know how to do the job for them, then you'll be able to pay the bills. The next piece beyond that is you're going to have to learn content. And so you're going to throw a GoPro on your head and you're going to film every single thing you do. And every single thing you do, you're going to post online, whether it's a long form YouTube video or short form, whatever, because that communicates instant transparency, straightforwardness, trust. Somebody watches 3 of your videos where you replace something that they don't even know, that the spark plug the spark plug fluid. You're like, watch me replace that. Somebody doesn't even know what it is that you're doing, but they can see you do it, and you explain why you're doing it that way, and you post more content than anybody else in your city. You will get all of the clients, and so that's going to be another skill you have to learn. And then once you cannot fulfill and deliver, then you raise your prices, and once you can't fulfill and deliver on that, then you start hiring people as well. And so I would take the job right now as spend all of your time trying to stack those skills so that you can go out on your own. That's what I would do. Okay. Off topic, if you don't mind me asking, do separate Paul 13 letters from the rest of Scripture? Maybe you mean, do you separate Paul's 13 letters from the rest of Scripture? I yes and no. I don't know what you mean by separate. Um, yeah, that would probably be a longer conversation. Because it depends on what you mean by some of those things. All right, let's see. Next question. Silver futures looking bullish. I'm a perma bear asking for a friend. Um, I precious metals right now look pretty overextended to me. They could keep on running, but I don't have a trading position open on either because they look very overextended, and they can keep on running for sure. But I don't see a good short entry or long entry for trading right now. I've got my long-term precious metals holdings that I don't touch ever, but from a trading perspective, I don't see a good position on either side at this point. Okay, speaking of fiscal solvency, what are your thoughts on the states using Article 5 of the Constitution to permanently fiscally restrain federal spending? 19 states have called for a convention. Wait, you're saying 19 states have called for a convention already? 19 states called convention, Article 5. As of late 2025, 19 states have passed resolutions to call for an Article 5 convention aiming to propose constitutional amendments, particularly for fiscal restraint, term limits, and power limitation, though 34 states are needed to compel Congress to call it, with ongoing efforts like the Convention of States movement pushing for this mechanism, never before used to alter the U.S. Constitution. Interesting. Well, that's the first I've heard of this. I should have probably heard about it before already, but I'm glad that you brought it up. I'll have to take a look into the details of that because I don't know much off the top of my head about how that works. What I do know is that the original intention of the Constitution was that the states would be more of let's say it would be a bottom-up government. So the states were supposed to be more powerful than the federal government, and that's why the Constitution is it says specifically in the Constitution here, we're going to list out all the things the federal government is allowed to do, and if it's not specifically stated in here, then the government's not allowed to do it. Anything else that people want to have happen from a governmental standpoint needs to be done by the states. And by the way, here's things that states also cannot do, or here's things that states cannot do. And so it limits the powers of the states from being able to violate people's rights. And then from the federal government, it says not only are we going to limit the government from doing that, we're going to just say if it's not specifically listed here, they can't do anything more. Now, obviously, that's been flipped up on its head because everything Congress does and the Supreme Court allows and the executive branch does is the argument is always, well, the Constitution doesn't prohibit it. And it's like, actually, it does because it's not specifically said that the government can do that, which means that they can't. So any action by the states to try and rein the federal government in on really any front, but especially fiscal, spending, I think is great. Probably not going to happen. All right. Thanks to Joe, I'm a member of vaulted.com now. Gold has been my best ROI so far. Well, I'm really glad to hear that. Vaulted is great. They used to be a sponsor of the channel when I did used to have sponsors. I'm a customer. I know the owner. He's a really great guy, McElvaney. His dad started the company. He owns it and runs it now. I believe his father passed away a while ago. Solid, really solid guy. Christian. They run the company. I highly recommend them. The one downside to it is that the gold is stored at the Royal Bank of Canada, which, nothing's going to happen there. But if push comes to shove, we've seen, what Canada's done before. And so the way that I like to use services like Vaulted is to stack. And once you hit, 10 ounces or so, then you get delivery of it. So you're not storing up like a massive amount of wealth there at any time. You're just using it to cheaply accumulate. And then once you have something that is worth paying for delivery on, then you take delivery on it. And so then you get kind of the best of both worlds. You're stacking physical, but only once it's financially, only once it makes financial sense, and that you're not storing dollars while gold runs away from you. You're storing gold. Somebody else is storing it for you. So, all right, next question. So I'm trying to scroll through the comments that are not questions to find questions. Okay, so this one's from Robert. It's not a question, but I'm going to comment on it. The problem is the gold miners push Bitcoin sponsors out of the libertarian shows. I don't know what that means. People who like gold don't like Bitcoin. That is true. I don't know what that means, that they push them out of libertarian shows. But then you said monetary metals mystery yield. So full disclosure, monetary metals, I partnered with them in the past, sponsor on my channel. I'm a customer and I'm also an investor in the company. Like I'm a shareholder in the company. It's not a mystery yield. In fact, it's very, very upfront and clear. So things like some of the crypto things like FTX and whatever, like those were mystery yields. It's like, okay, well, how are you generating yield? Monetary metals does two things. They do leases and bonds. And so they'll go to, let's say, a gold miner, and they'll say, okay, well, right now you need to borrow $1 million as you're a gold mining company, you've got gold in the ground. You need to borrow $1 million so that you can go buy equipment and hire people to get the gold out of the ground. Well, if the gold miner's like, yeah, let's do that because gold is $4,000 an ounce right now, and we can, make, a significant amount of money because we can pull it out of the ground for, let's say, $3,000 an ounce. So we'll make a nice chunk of change. We'll make a nice profit. So we're going to borrow all this money in order to do that. Well, it takes time for that to happen. So they borrow the $1 million. Now they owe $1 million back. And they go through this process. They hire, they get the equipment, they, start to work. Meanwhile, over the next 6 months, the price of gold drops to $2,000. Well, now they can't actually sell their gold for a profit. So they have to cease operation. But guess what? They still owe the $1 million back. And so monetary metals comes in and says, okay, instead of borrowing in dollars, borrow in gold. So we will lend you $1 million worth of gold. So mental math here, 1 million divided by 4,000, we will lend you 250 ounces of gold. And the gold miner says, well, what will I owe you back? And they say, okay, well, you'll owe us, let's say a 10% interest rate. So we're going to give you 250 pieces of gold. You owe us back 275 pieces of gold. And the gold miner sits there and thinks, well, shoot, then it doesn't matter what the price of gold does. If the price of gold skyrockets, we still pay back the gold, and we know we have the gold in the ground. If the price of gold plummets, we can still pay back the loan because we get the gold out of the ground and pay it back. And so the loan becomes they decrease their risk a lot by borrowing denominated in gold. Meanwhile, people like you and I, we're holding gold from $1,000 to $2,000 to $3,000 to $4,000 an ounce. If we ever want to be able to take any sort of profits from that, we have to sell it and lose our gold position. Not only that, we have to pay taxes on it. And so instead, what we can do is we can take a portion of our gold and put it to work through loans and say, okay, well, loan this out for us. And then what we get paid back in return is ounces of gold on our gold loans. And so it's no mystery. Obviously, there's risk involved. Otherwise, there wouldn't be any return. There wouldn't be any yield. We've got a really fantastic legal team. They've never had losses. They've never had defaults like that before. So the way that they structure these and the companies that they're working with are really great. But I mean, obviously, there's no such thing as a loan without risk of default or a lease without risk. So that's the way it works. It's no mystery. It's very straightforward. It does obviously it's more risk than you just holding the gold yourself. But if you hold the gold yourself, you also have the risk of it getting stolen. You also, if you put it in a vault, you have to pay for it. So you have negative yield on it. And so it is a way for a portion of gold for you to actually put it to work and make profits on it without actually having to sell it. And it's a win-win because the company who is borrowing in gold de-risks themselves from that price risk. And if you're thinking, well, why don't they just operate in the futures markets? It's because most companies are not big enough to do that. Most companies will hedge with futures, but there's a huge segment of companies that are not big enough or sophisticated enough to be able to hire somebody who knows how to do that and for them to have the oversight to make sure that there's no fraud going on or that they're doing it correctly. And so there's this big segment of the market that is much better served by just borrowing in, straight up in gold. Okay. I like how you explain and discuss political philosophy. You mentioned Ethics of Anarcho-Capitalism before. Do you have any other political social philosophy recommendations? Yes, the reason why I recommend that one so much is because it's very, very easy to read, and it's a fictional book too. It's like a story of these people that get stranded on an island and then have to work through developing like their own system of government. And so it's just very easy to digest. And so that's why I recommend that one a lot. I really, really like The Law by Frederick Bastiat. That one is fantastic. It's a short read. Even though it's an older book, it is, again, written in a way that is very easily digestible. Sometimes older books they're a little bit too dense, or written in an older style that is a little bit difficult to, you just have to be more focused and read slower. And then others that I like are, anything by Mises or Rothbard. What is the one right now that is my favorite? Library. For a New Liberty by Murray Rothbard. For a New Liberty, the Libertarian Manifesto by Murray Rothbard. Okay. Man, there's so many questions on monetary metals coming in. I'm assuming that those all got put in right before I just talked about monetary metals because, man, that's crazy. There are so many comments about this coming in. Okay, I'm just gonna assume that it's that it's been answered. All right, let's see. I refuse to buy anything that's doubled in price in the last year. Have you ever heard the saying? This is from Keynes, John Maynard Keynes. It's the only smart thing he ever said, that the market can remain irrational longer than you can remain solvent. Have you ever heard this saying from Warren Buffett? Be fearful when others are greedy, be greedy when others are fearful. Well, if you mix those two, it's also true that the market can remain greedy longer than you can remain fearful. Which means just because something has doubled has no bearing on where it's going to go from here. It just means that the market currently values that thing at that specific price. So I know psychologically it can feel like you missed out. And so it can feel like, well, it's already doubled. Like, what could it do from here? Well, it could double. It could 10x. What something has already done has no bearing on what it might do in the future. And in fact, you would not feel that same way. And this is a good indication that you're thinking you're looking at an investment opportunity through an emotional lens, not a logical lens. If you looked at that and said, okay, well, what if it had been $4,000 an ounce for the past 10 years straight? Well, then you wouldn't feel that way. So it's not actually about the price. It's just the emotional aspect of feeling like you missed out. And so the way you get around that is just to remind yourself that there's no such thing as missing out in markets. There's always another trade. There's always another opportunity. There's always a long, there's always a short. As long as humans are alive, there's always going to be an opportunity to make money in the long side or the short side in every market. Throughout history, it's always been that way. And throughout the future, it will always be that way. As long as there are humans alive, there's going to be an opportunity to make money. And so that means the opportunity to make money might be right in front of you, might be like in the asset that you are looking at. Just because something has doubled doesn't mean it can't double again or more or less. Just because it went up doesn't mean it's going to go down, but it doesn't mean it can't go down. And so you just have to look at things objectively from where they are and where you think that they're going to be headed, not based on what they've done in the past. Just try to get into Congress. I'm assuming you're saying me that I should get into Congress, and that's something that I don't think. It's almost like I want to say that I wouldn't wish that job on my worst enemy, but then again, it's like the reason I wouldn't want that on my worst enemy is because then that would that would be bad to have my worst enemy in Congress. So then that saying would actually backfire me, saying that okay, well, then I should get in. I really don't think that individuals in Congress have that much power to change things. I don't think put it this way. Over a long enough time horizon, every nation gets the government it wants and deserves. In other words, the people who are in power are a reflection of what the society wants. And the moment that changes, the power changes as well. Even if it's through violent insurrection, because at the end of the day, the majority is always more powerful. And so the power structure in place is always a reflection over the long term, is always a reflection of what the nation actually wants and therefore deserves. And so I believe the most powerful thing that I can do in order to change the direction that things are going is to educate people about the truth and have people change their own life directions. Because if I can change enough individuals' lives about what they do with their money and what they believe is true and what they believe is moral about the way that we should interact with the world, at a certain scale, that by itself, that fixes things. And I think given my skill set and my interests, I think I am more effective doing what I'm doing now than if I tried to do anything in any government in any capacity. What podcasters channels do you like to listen to? Do you listen to Tom Woods? Yeah, Tom Woods is great. From a political perspective, Tom Woods is great. Dave Smith is great. I'm a little bit more interest based than like channel or individual based. So if there's like a conversation happening that is interesting to me, or like a topic, then I'll be a lot more interested in watching that, regardless of who is driving the conversation. So, for instance, like Tucker Carlson recently interviewed Nick Fuentes. Fuentes. And I am not a big fan of either one of those people, but I was very interested in that conversation. I think both of those people have very bad political views on all, like on a lot of things, very dangerous ideas in terms of like harmful. Um, there's some stuff that I think that they're correct about and that I would agree with them on. But anyway, the point is that's a conversation I'm very interested in hearing, to see how those two idea people that I very much disagree with on most things, um, what that conversation looks like and what they talk about, and how they disagree with each other. And to be honest, it was a very disappointing conversation. It was not interesting at all. It did not go the way that I expected it to. So I was a little bit bummed about that. It was like a waste of an hour and a half or 2 hours or whatever. But anyway, that's yeah, Scott Horton. Yeah, you guys have thrown Scott Horton in there. He's great as well. I haven't actually listened to him on his podcast or his show. I've read his books and they're fantastic. I guess he will just ignore the question about monetary metals gold yield. Okay, you must be behind, dude. I spent like 15 minutes talking about monetary metals. So I don't know. I don't know what more you want from me. Um, I go back and watch it, I guess, because I talked about it quite a bit. All right. Next question. How would you go about protecting your gold? What's your opinion on platinum and palladium? I don't know much about palladium, especially because, well, what I do know about palladium is it's a great jewelry metal, in terms of like it doesn't have the allergy effects. It has the really good color that people want. You don't have the issues with like white gold where you need it redipped, or the nickel allergy issues. Um, it is lighter and therefore was cheaper than platinum. Maybe not therefore, but it was lighter metal. I think easier to work with than platinum. But it's a element that is very, very effective at um, however they make the like particulate filters and to get emissions down out of cars. And so car manufacturers just basically have scooped up now, I think like 85% of the global mined supply. And so it's just unaffordable. I think it's now more, or at one time it was more expensive than gold. I don't know what the price is right now off the top of my head. And so basically it stopped being used for jewelry because it got too expensive. People want that same color and those same properties. They'll go with platinum now instead. Um, but now with the reduction in CAFE standards and potential more rollbacks for EPA standards on the way, it's possible that palladium doesn't need to be used as much anymore. So maybe we have some room for palladium to come down. That's the extent of my knowledge on palladium. So don't take that as a trade recommendation or anything. Um, it's uh, I don't have a strong enough opinion either way to have a position on palladium. Platinum, I do. I'm long. Gold, I'm long. Um, the way that you protect yourself on them is you can hedge. You can just buy puts. Like you can buy puts on a gold ETF and a platinum ETF. All right. Let's see. Next question. I was your top 0.2% viewer this year in minutes. Well, that's crazy. 0.2%, not even 2%. Well, thank you, Heisenberg 2VJ18. I appreciate you watching my channel so much. Do you like Netflix? From a stock perspective, an investor perspective, well, let me say this. I don't like them enough to have a position. I have looked over the last couple of years quite a few times at potentially opening up a position on Netflix. And I definitely should have. Obviously, it's way higher now than it was a couple of years ago. It's down like what, 35% off of its highs now. So maybe it's a good time to get in. Oh no, like 25%, excuse me. off of its highs right now. So maybe it is a good time to get in here. They're buying out the studio and the content library of Warner Brothers right now, unless Trump is able to block it, which I don't think he'll be able to, but I think he's trying. And so it's basically like they just want the content that's on HBO Max right now. They want to be able to put that in their library, and then the movie studio to create more stuff. They want to own that as well. Good move for Netflix, I think, that one of their, everybody, what they need is, more content that people want to watch. Um, that's really that's one of the reasons why I don't have a position on them right now, is because I don't know. I don't have a strong opinion or really good way to estimate what I think they're going to be able to do in the future, especially in the face of the competition that everybody is looking at in that space right now. It's kind of like kind kind of hard to build a it's not like you're brand loyal to Netflix. You're loyal to the content that continually, is new stuff popping up on there. Um, and it doesn't have the same sort of stickiness that something like Apple or even like Prime would have, because Prime is like nobody buys Amazon Prime just for their videos, their movies and TV shows. Buy Amazon Prime for the free delivery, the 2-day delivery, and then they just get the TV shows as a bonus. So little bit of a different business model. So anyway, I don't know. I don't have a position on them. I enjoy some of their shows. Um, the last season of The Witcher was one of the worst things I've ever seen. Really, really liked the first season. Every season went downhill from there, and this last one with Liam Hemsworth was just, oh man. Put it this way: if you haven't seen it yet, one of the episodes has like a 15-minute long musical in the middle of it, where everybody, the whole cast, they're all like singing and dancing, like in this like actual musical. And then there's like a 10-minute cartoon segment in the middle of it as well. It's a train wreck. It is terrible. Okay. If you watch this video, the one thing you should learn is you aren't really a libertarian unless you listen to Scott Horton. I don't listen to his podcast. I've listened to him being interviewed a couple of times, and I really like him, but I like his books. And he says most of the stuff that he says in interviews in his books just better. So that's why I like his books. What do you think about gambling, sports betting, prediction markets, and other platforms? It is a skill. The way that you know it's a skill is because a very, very tiny percentage of gamblers make like all the profits, and it's almost always the same people consistently for years and years and years on end. And so it is a skill that can be learned and can be developed. Very similar to trading. Mostly the biggest skill is risk management. And so for 99% of people, they're going to go in there and they're going to throw money on a game and maybe parlay it with another one, and they're going to lose, $100 a week every single week for the football season. And 1 week they're going to make like $300 or $400, and then they're going to feel like, now I can, the rest of it is just house money, and then they lose it the rest of the season. And that's the way the majority of people gamble. But as long as you can participate in games where the there's some sort of an edge and you don't have the house completely stacked against you, where it's like if you go to the casino and you play roulette, the longer you play, the more likely you are to lose money. The odds are just they are for for the house. So that type of gambling is not what I'm talking about. But like sports betting, and sometimes prediction markets, you can find like actual real arbitrage opportunities where you bet on one thing happening in the market, where you can hedge your bet and you take both sides of the position, and no matter what happens, you're going to walk away with that spread. So I don't have anything against it. Does SanDisk still have headroom to open a long? I do really like SanDisk. It's down right now 20% from its high. It was down 33% from its high, and then just the last 2 days, it has rebounded. It's up 20% in the last 2 days. If you think those numbers don't make sense, it's because losses are always stronger than gains, and so if you have a 20% loss, a 20% gain from there does not get you back up to break even. So, short answer is I think yes. I think it's one of those like buying a great company at a decent price instead of buying a decent company at a great price. Um, but I mean, it is already worth $33 billion and it's had a massive run up. So, let's see. Next question. Do you know a company called Go, Phase and Shirley? I do not. I'm sorry. Um, Looking for another question here. What's your biggest hope for the future of liberty going forward? Well, it's not necessarily a hope. This is just the way that it works. Is people tend to go where they are treated best. So the reason why the U.S. has had such a high immigration rate over the past, let's see, 249 and a half years, actually longer because it was a place of strong immigration before 1776. That's literally where where all the pilgrims and settlers and pioneers came from. Anyway, is because people tend to go where they are treated best from the standpoint of liberty and freedom and money and culture and values and all that. And they tend to flee from places where there's oppression. And over the last 50 years, like the birth rate in America has been below the replacement rate. So since like 1960 something or 70 something, the if there was no immigration, the population would be much smaller now than it was then because the birth rate has been below replacement level. Um, and the reason why is because it is, all things considered, one of the best places to live. That does not mean that there are not massive problems. It just means that the massive problems are on net better than the massive problems that people are leaving, and running away from. And that has always been the case around the world, and it will always be will always be the case. Whether people have to flee like illegally and they have to like get out of the country and sneak out and try and escape, that happens, or whether people just leave freely and go somewhere that they want to go better. And that will always be the case. And so because of that, there is an incentive, at least for a short period of time, for the places who were the best and are now not becoming the best. They want to try and lock down and try and prevent people from leaving. So you see, on a smaller scale, this is happening right now in like California. Over the last couple of years, there have been ideas of like floating, if you live in California for at least a certain number of years, then you're going to owe income taxes or wealth taxes to California, like for the rest of your life. And they're trying to disincentivize or punish leaving, in order to keep all that wealth there. We just saw a bill introduced to Congress within the last couple of weeks, maybe a couple of months, that would outlaw dual citizenship, which means that if you are an American citizen, you cannot be a citizen of another nation, unless you expatriate, because they're trying to lock down, basically, not allow people to have the freedom to leave. Um, that never works. If you have to keep people by force, you end up forcing people out, which is why things like wealth taxes and those laws and those rule changes usually cause exoduses. Um, and so what works over time is just being the most attractive option. So the places around the world that are growing, that people are still moving to, that are attracting wealth and attracting businesses and attracting investment, will continue to be a competitive force on the rest of the world to stay competitive. And so personally, I think that patriotism is a weird religion. It's like, why just unless you've moved somewhere on purpose. Like somebody like Patrick Bet David, like he's an immigrant here. It's like he should be patriotic. He chose to come here. Like he shouldn't be trying to change it. This is like I could be wrong actually. I think he's an immigrant. I'm pretty sure. Maybe his parents were though. Either way though, you go somewhere by choice. It's like you're choosing to go there. So like you shouldn't go somewhere and then try and change it. It's like you went there because you liked it better than the alternative. Um, but and so you should be patriotic about that place because you made that choice intentionally. But if you were just born somewhere, it's like it's almost like a weird religion. It's like why would you have some like some like mental emotional loyalty to a an artificially created border that you didn't choose to be in. In which case, it's like, okay, well, if somewhere else is going to treat you better in the subjective way that you feel like you are treated better, even if that's more socialism, or even if that's more rules, or even if that whatever it is, then it's like, you leave. And so the hope for the future of things getting better is just that there will always be places that have the incentive to be better, and that forces a global competition. Okay. Next question. Mm, good time to load up on discretionary consumer stocks or too early? Um, hmm, that's a good question. I don't know. I don't know about that one. Maybe a good time to start nibbling. I'm not yet. Let's put it that way. I don't have a position in consumer discretionary specifically. Um, so that would be my most honest answer is just like that's what I have no position there. Uh, but might be time to start nibbling. Um, okay. Maybe you know a company which help with opening a crypto license is. Sorry, I don't know what that means. I don't know what a crypto license is. Are the rich just smart people who know how to handle themselves? No, this is one of the most misunderstood things about wealth is that it's associated with intelligence. And a lot of people who are very wealthy, they know this. Like if you watch interviews with billionaires, specifically where they're like talking about, their intelligence or whatever, like most of the time they're like, "Oh yeah, I was a terrible student. I could not focus in school. I got bad grades. My teachers always told me I was going to be a failure." And they don't consider themselves to be smart. In fact, many of them, many very rich people are very self-deprecating and they have like a low self-esteem that is many times one of the biggest driving factors in them just saying, I'm going to do whatever it takes to succeed. I'm going to force it through sheer will into existence because I'm just not smart enough to figure it out like the right way. And then on the other side, you have the intelligentsia, you have the academia, you have the people who have gone through the ranks, done all the right things. They went to school, they got good grades, they took the AP classes in high school, they did their master's degree in the 5-year program along with their bachelor's degree, and then they went on and got a PhD and they graduate and they feel smart because they spent their entire lives up to the point now where they're 25 to 30 years old. People have been telling them, you're brilliant, you're a genius, you are extremely smart. They've gotten the grades to prove it, they've gotten the certifications to prove it. And now they know something in their head and they have zero skills for the real world. They have no experience with making somebody that may or making something that somebody else wants badly enough to pay them for it. And so they're worth just their time like somebody who is dumb. like somebody who's never gone to school or never studied anything or never learned anything. The only thing they have of value is their time. So now they're stuck without being able to get a job that they feel like pays them what they are worth, because they feel like they should be the successful ones. And then you have this entire class of people who are just book smart, who feel entitled and feel like the world is rigged against them because now they have all this debt and they're the smart ones and they still have nothing. And that's why you have such a strong left intelligentsia academia, like the legal, everybody who goes to the universities, the Harvard, the Yale, and they go into law and they go into politics, because that's the only place where you can succeed without real world competence and just the certifications. And now they can tell people what to do and they feel like entitled to it because they're the smart ones. And so what was even the question? Actually, I got off on a little bit of a bunny trail there. Are rich people just smart people who know how to handle themselves? So no, in fact, many times it is the opposite. The only thing required to make money is having the skill to produce something that somebody else wants badly enough to pay you for it. That's it. When people talk about providing value, that's what that means. Can you make something that somebody else wants badly enough that they're willing to voluntarily give you money for it? And if you crack that skill and then you grow that skill, you can get more people to pay you for something you can produce, or you can get people to pay you more money for something you produce because you make it better or you make more of it. It's the only way to make more money. And to the extent that you do that, the more you get rich. It doesn't take being smart to do that. Most of the richest people on earth are not smart. They just figured out these are the proper things to do. They know what to do. They don't know, why things are or how things are. They just know, hey, if I do this, I make money. And sometimes the smartest people in the world, book smart, head smart, intelligent people, are the most resentful and envious because they have been promised the world and have received nothing but oppression in their own lens. And so then they go into politics and tell everybody else what they can and can't do. All right. What's your outlook on nuclear stocks over the next 5 years? I love nuclear. Oklo is one of my larger positions, but I also love a lot of nuclear stocks. So from the whole chain. So like uranium companies, small modular nuclear reactor companies, regular, established nuclear energy companies like Constellation and GE Vernova. I think is GE Vernova, GEV. Is that they're in nuclear, right? GEV. I don't think exclusively. Yes. So yes, yes to all the above. What do you think about Trump accounts for kids? I think they're a good idea. I think anytime there's a new account created by the government that gives you the ability to avoid confiscation, is good. So HSAs are great, IRAs are great, 401ks are great, 529s are great, custodial educational savings accounts are great. And I think these Trump kid accounts are going to be great. They all have their trade-offs. There's always going to be pros and cons. Whether it's contribution limits or investing rules, or whether you pay taxes on the money going in or the money coming out, there's always going to be trade-offs. But in general, they're going to be a very useful tool. The one thing that is going to bite people in the butt is they're going to think, oh, the $250 or the $1,000 that gets seated in the account is going to take care of my kids forever. And it's like, no, there's not enough growth that's going to happen on that money for it to be by itself very useful. The thing that it'll be useful for is parents making contributions to it and then that growing over time. But you shouldn't do that unless you're already on plan for your own financial freedom, meaning you don't have to be obviously retired yet, but you have to already be contributing enough to your own retirement where you're going to be set. And if you have extra left over after that you want to contribute to your kids, then do so. You don't want to contribute for your kids in substitution of contributing to yourself, because then when they grow up and they have kids and they're trying to buy a house and they're trying to buy cars and trying to put food on the table, now you've run out of money because you set them up, and now you're a burden on them, and they have to take care of you, and that's not a good position. Nobody want no you don't want to do that to your kids. So if you're going to give to your kids, it needs to be a blessing and not a future curse. Okay. If you are smart enough to just have your wealth handled by a financial advisor, you are already above average intelligence. Graduating college is a test of obedience, not intelligence. That's not true. I mean, it is obviously, especially lower grade levels are more tests of obedience, but the especially the higher up levels you get, they are intelligence tests. That's why, and by intelligence I mean the ability to study information and remember it for later, and then be able to communicate it back. And that's a pretty widely accepted definition of intelligence. I'm assuming that you're just defining intelligence differently. And so it's why IQ tests tend to track pretty closely with that. And in a lot of industries in certain countries, they're not allowed to directly test for intelligence with things like IQ tests for hiring. And so that has been basically that job has been outsourced to universities so that jobs can just say, okay, well, at least we know you have the ability to learn something and regurgitate it later, which means there's some sort of filter in place for, us knowing whether, we should hire you. And it's becoming less and less valuable because there's more and more people getting pushed through getting degrees that, it's less of a signal than it used to be for sure. And I usually recommend people don't go to college. That being said, it still is technically a test of intelligence. In terms of financial advisors, I agree. So the vast majority of people, what they're going to do is just spend all their money and go into debt. So it's like anything you do past that is going to be better for you. Like just a simple budget. And then even if you just put it in a savings account, it's like that's better than the default for most people. And then the next step from there would be like, okay, I'm going to hire a financial advisor. And even if you're paying them 2% and all they're doing is putting you in index funds, at least that's saving you from gambling it away on little meme stocks. Like you're going to do better than you would if you just put it in a savings account. So it's not ideal, but you're still at that point doing better than like almost everybody in the country. Now, the step beyond that is to learn how to invest for yourself so that you can make those decisions yourself. You don't have to pay somebody 2% just to put you in the same things that you could put yourself in yourself. And then, maybe you even learn how to get better investing returns. But there, that's primarily who I speak to when I'm, on my YouTube channel and in my programs, people who want to invest for themselves and go beyond what an advisor can do for them by just throwing them in SPY. But um, but yeah, for the vast majority of people, something like hiring a financial advisor is going to be way better than the default. Um, our electric generation company is going to boom. I mean, I am very bullish on uh, on energy broadly, including companies involved in the whole supply chain of energy production, including electricity, grid, everything. Um, New to channel, really appreciate your insight. Not trying to bother you with this EFFR super cycle question. Just not sure if it's coming through the Q&A or if you're not understanding the question. I don't understand the question. I don't know what specifically you're asking me about here. So I don't know whether you're saying, hey, the Fed is cutting rates right now. What is the impact going to be on the economy and the markets? What I don't understand whether you're saying, hey, this is a cycle where they're constantly doing the exact same thing because they're not. So I don't understand specifically what you're asking. I did talk about what I thought you were asking earlier. So if you heard that and that was not what you were looking for. Give me a more detailed question. If you did not hear that, then when this live stream ends, you can go back and watch that. And this chat does a replay in the when you watch the video back. And so you can just click on the chat replay and then fast forward to the point where your question pops up, and then you'll hear what I said. Okay. What do you think of quantum computing stocks? I am bearish. I am bearish on quantum computing, and I have put positions on multiple quantum computing stocks. There are kind of EQ. That's another form of intelligence. The problem with emotional intelligence is it is shown to be basically impossible to measure. And if you can't measure something, it probably doesn't exist. All right. What do you think of using fair value to determine whether the price of a given stock is buy or sell? I mean, it's one thing. I would never ever use just one thing to make a purchase decision. But think about it like if you're going to go build a house, would you want to show up to the job site with only a hammer? No. Do you want a hammer? Of course. Do you want only a hammer? Absolutely not. You're probably not going to be able to very effectively build a very good house if all you have is a hammer. Okay. Are you homeschooling your children? Do you like or have you heard of the Ron Paul curriculum? Yes, I'm homeschooling my children for a couple of reasons. So number one, well, probably more than a couple of reasons. I don't know. One of them I don't want to say on YouTube. Well, there are things that happen in American schools that get a lot of attention on the news because for some reason in American schools, well, I don't know, this might be a global thing, but there's very little protection of those campuses that happens in most places. And so if somebody wants to get onto that campus and do something, generally they're going to be able to. So that's one reason. It's not the primary reason. My kids were getting around school age right when, okay, this is another word I never say on YouTube. Man, this is hard to say. Right around 2020. And during that time, most people had to homeschool anyway. So like teachers would send stuff home for, there were like Zoom things and here's the curriculum that we're doing, here's the worksheets, whatever. So most parents were homeschooling anyway during that period of time. And that was right when my kids would have been starting school. And my wife had already started doing early learning stuff with the kids. And so, like numbers and letters and all that stuff. And so when 2020 and 2021 came around, it was like, well, we're just continuing to do what we've been doing. And then by the time everybody did start actually going back to school, my kids were like 3 to 4 grade levels ahead of their age group. And also I started traveling a lot, doing speaking at different places. And now my family, we travel a lot, mostly for fun. And so like we're constant, like, with cousins or friends or whatever, we're, saying, hey, we're going to go here, we're going to do this. And they're like, okay, well, we can't come until, we'll come on Friday night because, we can't miss another day of school. We've already missed too much. We're like, never, we don't even think about that. It's like, and my kids are still like in every subject between 2 to 4 grade levels ahead of their age group. And so if they were to go to school, they'd be like, not starting over, but like severely going backwards. And so for all of those reasons, and oh, by the way, they only do like 3 hours of school a day. And we have them in a ton of extracurricular activities. So they're around other people and other kids and doing stuff and learning other skills with the other time. And even with that little amount of time, they're still like way, way, way ahead because in school, they have to teach to the lowest common denominator. And so it just moves so slowly. And by the way, everybody that we know who sends their kids to school, same at grade level, when they come home, they've got 1 to 3 hours of homework like every day, and they don't know how to do it. So their parents are homeschooling them anyway to teaching them how to do their homework. It's like, like you're still doing the homeschooling with the kids. They're just sitting in a classroom for 8 hours a day before you do your schooling. So it works really well for us. Our kids like it. We travel a ton. We take off days whenever we need to. They're still way ahead. If there was an issue, like if they had problems being around other people, other adults, other kids, or if they were behind, um, if things change in the future, who knows? They might go to school. But as of right now, we do homeschool, and we all really enjoy it. And by the way, the one thing everybody says is like, okay, well, what about socialization? It's like I know a lot of people who went to public school their entire life, and they are weird. They are hard to talk to. They can't hold a conversation. They're not socialized. So the environment of being around other kids is not sufficient for socialization. And I also don't think it's necessary, but we'll see. All right. Oh, and then the Ron Paul curriculum. I've heard of it. We looked at it. It actually wasn't very good. I love the libertarian stuff that's weaved into it, but it was a difficult curriculum to use. Um, so for for that kind of stuff, I mean, we talk about that kind of stuff a lot, so we don't necessarily need that built into the curriculum. They watch like the Tuttle twins and stuff, and so um, I don't think they're missing out. Um, let's see. We've been going for like an hour and a half now. I'm gonna have to end the stream soon. So I'm gonna pick like one more question here. So sorry for everybody that threw more questions in there, and I didn't get to them. If these job losses continue this trend, wouldn't company earnings start to take a hit? This could start hitting stock market prices too. Generally, no, because most of these layoffs are not happening because of financial troubles for the company. Most of these layoffs are happening because these jobs are, unnecessary now. So, like for instance, Amazon, they're constantly purging people, and hiring a ton of people seasonally, and then purging people. And so it's like it's just costs that are being removed from the company. So many times these layoffs actually have bullish pressure on the stocks because it's like for instance, Microsoft, I think for every person they lay off, they're able to increase their revenue by like close to $1 million, not decrease, increase. And so they're decreasing costs and increasing revenue. So for a lot of positions that are that people are losing their jobs, it's like they're being replaced by software. Um, so no, I think for the most part, seeing the type of layoffs we're seeing right now, they're usually not negatives for the companies, which would mean it's not a negative for the stock market overall. All right, one more question here. This is a good one. All right, what would your advice be for a trader who bought SMCI during the hype at $50 a share and are now upside down on it? Do you see any hope of it recovering, or should they cut their losses? Okay, so SMCI is currently at $34, and it was all the way up at 123. And so you say you bought in at the hype, you didn't buy in at the top of the hype. If you bought in at $50 a share, I mean, you're pretty dang close from the standpoint of like the overall chart. So, a couple of things. Number one, no matter what, always have your exit planned before you enter. So there's a Star Wars show called Andor. It is the best Star Wars media that has ever been produced in terms of like quality of show or movie. It is absolutely fantastic. The people on the left love it because they think it's a rally cry against the political right, and the people on the right love it because they think it's a political rally cry against the people on the left. And really, it's like a freedom manifesto. So the it's like a stealth. There's libertarian, freedom ideas woven into it that I just think are beautiful, but also it's just a good story and it keeps you on the edge of your seat. Anyway, in the first season, there's an episode where the main character is trying to sell a piece of technology to somebody, and that guy comes to buy it from them. And while they're trying to do the transaction, Um, the empire um, is like closing in on them, and the building is like getting surrounded. And the guy who is the buyer says, like, let's go. And the seller is like, we don't have a way out. We're surrounded. And the guy says, always make your exit before you enter. And he hits a button, and this back wall blows up, and they, escape that way. And it's a perfect story to illustrate what you're supposed to do with trading. Never enter a position or investing. Never enter a position if you don't know where you're going to get out, both on the upside and the downside. In other words, if this does what you think it's going to do, what is your exit? Because if you think it's undervalued right now and you're buying like Warren Buffett, you will sell once it's overvalued. So, what is your metric to determine when it is overvalued? Are you looking at PE? Are you looking at the the technicals? Are you looking at what management, like whatever it is? You need a metric that allows you to say this is the time to get out on the upside. Also, you need something to objectively say, if I'm wrong and this doesn't do what I think it's going to do, how am I going to get out? Where am I going to get out? So, whether you are a long term investor or a short term trader, this applies to you. Always make your exits on the upside and the downside before you make your entry, because if you don't know where you're going to get out, which means emotion will take over. Once you have money on the line, your brain can't think like a logical computer. Your lizard brain takes over, because you start thinking about loss and gain, fear and greed. And you won't be able to make a rational decision once money is on the line. So the way to avoid making an irrational lizard brain decision is to make a logical decision before money's on the line, before you enter the position. So, with that being said, try and remember back to when you bought at 50, and when you bought at 50, what was your idea? Did you think, okay, well, it was up at 120, it fell to 50, and so I'm going to sell once it gets back up to 120? And fine. If that's the case, do you still think it's going to get back up to 120? And what are you basing that on? If you think it's going to get back up to 120 because, hey, it established really solid support around the old resistance of like $32 per share, and every time over the past year and a half where it's dipped below that, it shoots right back above that, and we're forming a nice little wedge right now. And I think within the next year and a half, it'll break out back to the upside again. And the price to earnings ratio is only 27, and I think it'll be valued higher than that in the future. And they've got a good, some good contracts on the way, and they're doing this, they're getting out of debt, and they're deploying capital better and whatever. Like, if you've got a good thesis on what you think the company's doing, then that's fine. Then nothing has changed for you. Now, if you're looking at this and saying, well, I didn't have a reason to get in, then the next question is, okay, if you had the cash right now, let's say your position right now is worth 10 grand. Imagine you're sitting there right now with 10 grand in cash instead. Would you use that to buy SMCI, or would you use that cash to leave in cash, or would you use that cash to buy something else because you think something else has a better opportunity of going up more, or more certainly? If you say, no, I think SMCI is at this price the best, like I would, if I had 10 grand cash, I would put it back in this right now, then that's your answer. Like, that's your answer of like what you should do. You would hold. But if you sit there and think, oh man, if I had 10 grand in cash right now instead of this position, I would leave it in cash, or I would buy this other stock instead. I would buy ASML instead, or I would buy TSM instead, or I'd buy um, Nvidia instead, or whatever. Then that's your answer. The only reason you're holding on to it is because you think your loss isn't real. But it is. You haven't realized it yet, but that's the current price. And so you holding on doesn't change that, and doesn't change the fact that it could go down more from here. The biggest and most important thing that any investor will always have to learn is that risk management is the only thing that matters. You can manage risk a number of ways. You can manage risk by placing stop orders if you're trading stocks. You can manage risk by position sizing so that if it goes to zero, it's still a tiny percent of your portfolio. You can manage risk by buying stocks with a margin of safety so that worst case scenario, you're going to get a specific percent of your investment back. You can manage risk a whole number, any way you want. But if you don't manage risk, the likelihood is that you'll either slowly bleed to death or you'll blow up. Risk management is the number one thing that every successful investor and trader throughout history has learned is the most important rule. So try and take your emotion out of it, get back into the frame of mind when you bought it, if you had the cash right now, and that'll help you make the decision. Okay, guys, that's it. Lots of good questions. I've got to record a regular YouTube video still today, so I don't want to completely kill my voice. So we're gonna hop off now, but appreciate the good questions, and we'll see you on the next one.